Welcome back to Strictly Money. The alternative minimum tax. It's a tax many Canadians may not be familiar with because it typically doesn't impact most people. But the AMT system is actually a parallel tax that's run in the background with the goal of preventing high income earners and trusts from paying little or no tax. Well, there are changes coming to this tax next year, changes that could actually affect Canadians who have a gain on the sale of a business or a vacation property. Brian Ernewein is Senior Advisor in National Tax with KPMG in Canada, and he joins me now. Hi, Brian. Thanks for coming on.
Oh, it's my pleasure.
So I was actually surprised to learn that there is this parallel tax system running alongside the tax system that I think most of us are familiar with. Correct me if I'm wrong. So my understanding is this AMT system allows fewer deductions and exemptions that would otherwise be the case with regular income tax calculation. And if the amount of tax calculated under the AMT system is more than the amount owing under the regular system, then there's a difference that someone would owe. Is that right? And can you just explain why this was created in the first place?
Right. So you're absolutely right on all counts. In fact, the alternative minimum tax, or AMT, has been part of the Canadian tax system for over 35 years. It was first brought into force in 1986, and the current government announced during the last election campaign that it was concerned that the AMT was not as effective as it would like it to be, and announced that it would be developing changes. Those changes were put forward in the latest federal budget this past March 28th. I assume we'll get into the details, but to give your audience a sense of what the AMT does and what the budget changes, it is, as you say, quite literally an alternative minimum tax. You recompute your income with a number of adjustments, generally limiting deductions and credits available under the regular tax system, and then you apply a tax rate to that redefined income amount. And a taxpayer is required to pay, just as you said, the greater the regular income tax and the alternative income
Mhm.
tax.
So, Brian, I
The
guess,
budget made two.
yeah,
Sorry, please.
go
Yes.
ahead. Okay.
I was
I
just
was
going to say
just
that
going to
the please.
go ahead. Go ahead, Brian.
I was just going to say that the budget made two major changes. It increased the basic amount above which the AMT could apply. Under the current rules, the basic amount is just $40,000. Under the proposed rules, that basic amount increases to roughly 173,000 and is indexed going forward. And that's going to actually reduce the number of taxpayers facing potential AMT liability. According to Department of Finance estimates, about 70,000 taxpayers currently pay AMT, and under the proposals, that number will drop to around 32,000. So that's the good news.
Yeah.
But the AMT will also be tightened in a number of significant ways, and the government estimates that those changes will increase its revenues by roughly $700 million a year. So while there'll be fewer taxpayers caught in the AMT net, those taxpayers who are caught may find
They're going to
themselves
be, yeah.
facing a significantly higher AMT bill. Exactly.
Yeah. Okay, we're going to go through all of this because I know a lot of people are
Yeah.
thinking, "Wow, there's a lot of information." Brian,
Yeah.
I just want to go back though and say, if the government was concerned about high income earners not paying their fair share, why just not use that system? Why have two systems? Do you know?
Well, it's a very important question, and I don't think the answer is absolute.
Mm.
Logically, as you say, if you think the regular tax system is working, you would leave it alone. Or if it's not, you would change it rather than create an alternative income system. I think the thinking presumably has to be that individual tax preferences can be acceptable on their own, but in some respects, using a combination of them in a manner that reduces one's tax bill below a certain level is perceived, optically at least, to be problematic for the government.
Mm. So, we've mentioned that the changes are coming. These are proposed changes, right? So I'm
Yes.
assuming they're still working through all the details. Why is this happening now? Like, what was the conversation that led to saying we need to update this?
Well, there's probably some internal workings of government that sort of
Mhm.
led them to include it as part of their agenda. So that some of the parties the party that's supporting the current government thought that an AMT would be should be strengthened, and I believe that the I can only believe that the current government thinks the same thing. That's about as much as I sort of are able to offer on the point.
Okay. Yeah, and I'm assuming, level the playing field as well. Um, In terms of just one deduction that is allowed under the regular system that wouldn't be allowed, can you just give us an example? We only have a 10 seconds till the break.
Sure. As a deduction is interest expense. Only half of interest expense is going to be allowed for AMT purposes. I offer a second. The same for loss carryovers. Only half of loss carryovers will be allowed.
Okay, we'll get into this after this break. We'll be right back. Welcome back. Brian, you alluded to some of the proposed changes that could be coming into effect January 1st. We have a board, so let's run through this again. You had mentioned that the AMT rate is going to increase, but the exemption also gets bumped up, as you can see here. I'm assuming, like you had mentioned, this is really to try to target the higher income earners more specifically, right? Because my understanding was a lot of so-called middle class were getting caught.
Yes, that's right. So the AMT rate is currently 15%, and the proposal is to take it to 20 and a half, as you say. We talked before the break about certain deductions being limited. It's also the case that the AMT is going to increase the inclusion. So capital gains are only taxable at only half of capital gains are currently taxable under the regular system. Under the AMT already, it's the case that 80% of gains are
80%, yeah.
included, but that goes up to 100%. The same for employee stock options. And also on the sort of deduction or deduction side, in addition to the losses and interest expense that I mentioned, tax credits are going to be reduced for AMT purposes. You'll generally only be able to claim half of your tax credits. The big one there, although there are others, is the charitable donations tax credit, which is for which only half of the credit otherwise available for regular income tax purposes will be available under the AMT.
So let's go back to the capital gains one, because I think this is where maybe some people are concerned. You heard my introduction that, obviously principal residence is excluded, but say
Right.
someone has a cottage or they're selling a business. Does this mean that there's a greater chance that more people are going to pay higher tax?
I think you've put it well that there's a greater chance that somebody will. Whether or not your AMT will actually exceed your regular income tax is going to depend on a number of factors, including your other income and other deductions or credits being claimed. But the maximum capital gains rate under the regular system for individuals is 16.5%. The AMT rate on capital gains and other income subject to AMT is 20.5%. So if you have significant capital gains, there's a great chance that you will pay some AMT on those gains simply because of the higher rate that's applicable under the AMT.
Okay. Let's bring up the board again because you talked about the charitable donations part. I'm hearing sort of rumblings that there's some concerns about this. What could that be? Would it affect charities?
Well, it can. I mean, it can
Yeah.
affect charities because it can affect charitable donations. And once again, as I've said, there's going to be a higher capital gains inclusion rate for charitable donations, including donations of listed securities, which are generally exempt from capital gains tax. 30% of those otherwise exempt gains under the regular income tax system are going to be taxable under the AMT.
Mhm.
And as I said earlier as well, there's only half the charitable donation that's available under the AMT. I can't emphasize enough that it's all fact dependent, but we've run some examples that for a very high income taxpayer and making a sizable charitable donation if of listed securities, most of the value of those listed securities is represented by capital gains, they may face a material AMT liability.
Yeah. So, Brian, for viewers who think that they might be impacted, because it can be complicated, right? You're running two different
Sure.
scenarios here. How do they check? Is it just as simple as going to their tax accountant? Are there programs out there that they can figure this out?
Well, I'm sure that there's tax software that will cover AMT as well as regular income tax for individual tax filers, but I wouldn't have thought that that's the right way to approach it. Sort of after the fact to figure out whether you've got a problem only once the problem has materialized. Given the sort of taxpayer we're talking about, a high income earner potentially generating large capital gains or claiming losses or interest expense or making sizable charitable donations. I think the better advice is to seek advice before you get into the taxation year or incurring that major event to try to sort through what the potential AMT exposure is and to see if there's ways to manage and mitigate that liability.
Okay. Um, Very quick question. We have about 10 seconds left. Do you
Sure.
think this levels the playing field? Is this welcome news from what you're hearing from your clients?
Well, I might say that it's the government has decided that it does.
Yeah.
The important thing is that it seems to be happening. Draft legislations come out. We can anticipate implementing legislation to go forward in a bill this fall. So I think it's the better operating assumption is that it will be a reality, perhaps
Yeah.
with some changes, but it will be a
Okay.
reality by 2024.
Okay. Thanks, Brian. Thanks for coming on today.
Thank
Really
you.
appreciate it.
My pleasure. Bye for now.